You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Thursday, 13th day of March, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first live broadcast is our live trading room. So that one's private, members only, and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us in about 50 minutes, he'll walk you through step by step exactly how to do it. It's a piece of cake. We'll get your indicators up and running today. Your trial will start tomorrow, but not to worry, you'll still get 5 consecutive trading days on the trial. So that'll carry you through next Thursday. The weekend does not count against you. And there's no credit card required. We want you to have a clear head so you can pay attention, learn, and at the end of the 5-day trial, make a well-informed, intelligent decision as to whether or not what we do is right for you. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and then come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do this once. Go to mytradingiq.com, scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In the email, there will be a link at 12 noon Eastern. All you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. Well, you can do both via our YouTube channel, which is easy to remember, youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are and how we've evolved over the years. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but I encourage you to go in there and poke around. Get an idea of what it's taken to get from where we started to where we are now. It's been quite a journey, and I know that many of you have been along for the ride all the way back to 2005. That's 20 years. Wow, 20 years this April. So again, if you're new, just pick some days at random. Watch a little bit, jump to another day, watch a little bit. You get the idea. Now, our schedule for the afternoon broadcast is posted right here. So we're going to just dive into our daily devotional. And we're on day 5 of 5 on the topic, No Regrets. Our scripture today is Isaiah 58, verses 6 through 9. And I'm going to share it with you from the Message translation. This is the kind of fast day I'm after. To break the chains of injustice, get rid of exploitation in the workplace, free the oppressed, cancel debts. What I'm interested in seeing you do is sharing your food with the hungry, inviting the homeless poor into your homes, putting clothes on the shivering ill-clad, being available to your own families. Do this and the lights will turn on, and your lives will turn around at once. Your righteousness will pave your way. The God of glory will secure your passage. Then when you pray, God will answer. You'll call out for help, and I'll say, here I am. Again, that was Isaiah 58, verses 6 through 9. So, on the last day of No Regrets, we're going to talk about sowing generously. From the time God called me into ministry, I prayed for people to be healed. I prayed for spiritual healing, physical healing, and emotional healing, believing that God is well able to perform it at any given time. I believe today I am reaping a harvest from what I have sown, praying for healing for others. I've often wondered what would have happened had I not used the gifts I'd been given. In my heart, even through times of fighting illness, I felt that I had much more to give, much more to live for, and much more to pay forward. I know that I have received a bountiful harvest from the Lord. I've been given a second chance in life. His kindness is unmerited, His love endless, and His grace a free gift. Don't wait. Perform those acts of kindness today, paying it forward and living your life free of regret. Some thoughts on intentional living. Be a blessing because you've been given blessings. Share not only your wealth, but also your spiritual gifts and talents. Expect increase and pay forward. Know that God gives the seed and He multiplies it so as to use it for His glory. We'll start on a new topic tomorrow. Let's pray. Heavenly Father, we thank You for calling us to be agents of justice, mercy, and compassion. Help us to break the chains of injustice, lift up the oppressed, and care for those in need. May we share our blessings, feed the hungry, clothe the poor, reflecting your love in everything we do. We pray, God, that you would let your light shine through us. And when we call upon you, may we hear your voice saying, "Here I am." It's in Jesus' name we believe and pray. And everybody said, amen. Amen, and happy Thursday. Thursday meaning that, yes, it is Members Only Workshop tonight, 8 p.m. Eastern. All right, let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 392 points, almost 1%. The NASDAQ is down 274, over 1.5%. S&P 500 down 58, that's a little over 1%. The Russell 2000 down 26 points, well over 1.25%, closing in on 1.5%. Well, they're certainly all in the same color, aren't they? In the commodity basket, crude oil down 84 cents, trading 66.84 last. That's a drop of 1.25%. Gold up $44, trading $29.90 last. That's a gain of 1.5%. Silver up 89 cents, trading $34.62 last. That's a gain of over 2.5%, or $5,000 per contract traded. In the Asian markets at the close, the Nikkei dropped 29 points, Shanghai fell 13, the Hang Seng dropped 137. And in the European markets at the close, FTSE down 5, the DAX down 140, the CAC down 41. So that gave us a red day in Asia. It was a red day for the UK. And needless to say, it is a big red radio Thursday here in the US of A. We had a couple of little glimpses of green yesterday, but they didn't stick around long, did it? Let's check the news. The wheels on the tariff go round and round, round and round. Canada and the European Union yesterday announced another round of tariffs on U.S. imports, with Canada applying a 25% levy on steel products and the EU targeting a range of agricultural products. Officials said the moves were retaliatory for tariffs put in place by the Trump administration. The U.S. exports roughly $2 trillion annually to countries around the globe, second to China at around $3.5 trillion. Generally speaking, tariffs act as taxes on imports into the country that levies the fee. The administration has generally favored using tariffs to affect policy, focusing on fentanyl production and illegal immigration. Having put in place broad 25% tariffs on imports from Mexico and Canada before moderating the rules, the day-to-day changes have left many in a state of uncertainty. And that's really what we're seeing in the markets is FUD. Fear, uncertainty, and doubt. One thing the markets hate is uncertainty. And, well, it's everywhere you look. Video game developer Niantic, maker of the popular augmented reality Pokemon Go, sold its game division yesterday to Scopely for a reported $3.5 billion. The sale is one of the top 10 largest deals in industry history, behind the acquisition of Scopely by Saudi-owned Savvy Games in 2023. Pokemon Go, based on the 3-decade-old Japanese franchise, featuring a range of creatures that protagonists must catch in a ball for study, boasts around 90 million active players per month. Think about that, 90 million active players per month. In the game, players walk around real-world environments in an attempt to find and collect a wide variety of creatures. Critics have accused Niantic of amassing user data, both location-based and augmented reality environments, to then sell without consent. Niantic founder and CEO John Hank helped create Meridian 59, one of its first massively multiplayer online role-playing games, ultimately selling his game studio in 1996. He then helped lead mapping startup Keyhole, which was acquired by Google and formed the core technology behind Google Maps. Pokemon. Boy, there was quite a stir in the Christian community many years ago about how demonic it was, and there was I think that was that in the I think that was after the Satanic Panic. Anyway, some of those cards, the trading cards, the playing cards, there's some rare ones that have incredible value. You can check it out not on YouTube, but on eBay. The federal government could be in for a shutdown in less than 2 days after Senate Democrats offered up a plan to play hardball and oppose a House bill that would keep the government open until September, alongside spending cuts to various programs. The counteroffer from Democrats, with the votes of at least a few of them required for any bill to pass, would keep the government open for a month, but faces little chance of final passage in time, with House Republicans already having departed Washington and Republican leaders confident they have Senator Chuck Schumer and his colleagues cornered. Senate Democrats tried to plot a strategy yesterday, with reporters stationed outside able to hear audible shouting at one point, with Schumer then leaving the meeting to say Republicans do not have the votes in the Senate to invoke cloture on the House CR. So we got a clean CR, and they just don't want to play ball. The standoff appears likely to lead to multiple votes in the coming days, with economic and political prognosticators reacting with a mix of increased odds in the chances of a shutdown, alongside a jaundiced but unsettled view of what the effect might be on the economy either way. Historically, government shutdowns have had limited market reaction. That's from an analyst over at Raymond James. He said that is likely to remain the case, but adding to the significant amount of uncertainty coming out of D.C. is certainly unwelcome in the current market climate. There's that FUD. Fear, uncertainty, and doubt. Two recent readings on inflation showed price increases decelerated in February But within the details, economists see warning signs. Today's report from the Bureau of Labor Statistics showed that its core producer price index, or the PPI as we know it, which tracks the price changes companies see and excludes food and energy because we don't use those, rose 3.4% from the year prior, down from the 3.6% seen in January. Meanwhile, the Bureau of Labor Statistics Consumer Price Index, the CPI, showed core prices rose 3.1% in February, the lowest yearly increase in core CPI since April of 2021. But the components from CPI and PPI that pass through to the Fed's preferred inflation measure, the Core Personal Consumption Expenditure Index, or the PCE, indicate the closely followed inflation metric didn't fall in February. Bank of America economists and several other Wall Street research teams now estimate that core PCE, which excludes food and energy, will show prices increased 2.7% in February, up from the 2.6% increase seen in January. Bank of America economist said this: "This would indicate progress on inflation continues to stall and reinforces our call for the Fed to remain on hold." I don't doubt that. Oil, which we just said is down today. Oil fell, this is from Bloomberg, oil fell after the International Energy Agency warned that consumption is under pressure from the escalating global trade war. West Texas Intermediate slid to near $67 a barrel, following a 2.2% jump yesterday. That was its biggest gain in almost 2 weeks. Global oil supply is likely to exceed demand by about 600,000 barrels a day this year as tariffs weaken macroeconomic conditions. U.S. equities also dropped on uncertainty about the effects of the trade war. The Federal Trade Commission, FTC, has walked back comments that a lack of resources is interfering with the agency's ability to be ready for a September trial over Amazon's Prime program. Jonathan Cohen, a lawyer for the FTC, had asked a federal judge during a hearing yesterday to delay the trial and relax deadlines in the case, citing budgetary and staffing shortfalls. But the agency made an about-face later in the day, telling U.S. District Judge John Chun in a letter submitted in court that the statements Cohen made were incorrect. Cohen wrote in a letter, "I want to clarify comments I made today. I was wrong. The Commission does not have resource constraints, and we are fully prepared to litigate this case." In a statement sent to the Associated Press today, FTC Chair Andrew Ferguson also said the attorney was wrong. Cohen's comments were made amid large-scale cost-cutting efforts across the federal government, driven by Elon Musk's Department of Government Efficiency. The trial is the result of a lawsuit the Commission filed in 2023, accusing Amazon of enrolling consumers in its Prime program without their consent and making it difficult for them to cancel their subscriptions. An Amazon spokesperson did not immediately reply. And the last, American Eagle Outfitters. Their shares fell today. How much? Do I have it here? Yeah, down about 3%. Now, this is a company that makes fashion clothes for teens and young adults. The company behind American Eagle and Aerie brands predicted full-year revenue will fall by a low single-digit %, while analysts surveyed by Visible Alpha were looking for a 3% increase. The CEO noted that the first quarter is off to a slower start than expected, reflecting less robust demand and colder weather. Schottenstein, that's the CEO, added that while the company anticipates improvement as the spring season gets underway, we are also taking proactive steps to strengthen the top line, manage inventory, and reduce expenses. So there you have it. Fear, uncertainty, and doubt. Hey, but guess what? This too shall pass. How long? I can't answer that. I just know it will. All right, Logic 247. That's our 24/7 around the clock E-mini alert service. It's not just E-minis, it's also crude, gold, silver. Over the last 345 weeks, we have issued over 19,100, I think it's almost 19,200 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. So far this week, now Valerie did the recap at 6:30 a.m. Eastern this morning, so some things probably changed, but at the time she did the recap, since the markets opened Sunday night, we've issued a total of 47 alerts. Still waiting on the outcome of 10. That gave us 37 actionable alerts, and we've got 2 stop-outs now. Remember yesterday we were at 0%, but I didn't expect that to hold through the entire week. So now we're sitting at 5% of actionable alerts stopped out. So if the average is 20% or less, then so far okay, I guess. Now, the logic alerts, while yes, you can trade them, the real purpose is to help you learn how to read a chart. We want you to be able to look at any chart of any market and any time frame, and with the use of our humble indicator set, instinctively know what the next high probability move is. You want to be able to look at a chart and relative to whatever time frame you're looking at, instinctively see where the next potential resistance is, where the next potential support is, and then the window of opportunity in between will jump right out at you, if there is one. Once you get to that point, then you don't need anybody's alerts. All you need is a chart, data, and a platform to execute on. So again, if you're going to trade them, that's fine. But please, use them to learn how to read the chart. Okay? Now, each logic alert has an entry price, an initial target that's designed to help you get your goal for the day, often additional targets, and then a final trade to target. If it's a long alert, the final trade to target will be the weekly trading zone above, and if it's a short alert, the final trade to target will be the weekly trading zone below. Now, 345 weeks, that's a long time. 19,100 and change alerts. So everybody's had plenty of opportunity to use them properly, so I hope you've been doing so. Now, long before we had Logic 247, we had the concierge trade alerts. And they're a little bit different. The biggest difference, the Logic alerts can come out anytime around the clock. 2 a.m., 2 p.m. We have traders around the globe and futures trade around the clock. So our day session is their night session and vice versa. But the concierge trade alerts, they do not come around on the clock. They're posted as a static report shortly after the Globex Open, and on the days when I can, 5 minutes ahead of the Globex Open. So last week I managed to get them out 5 minutes ahead of the Open every day, I think, except Sunday. And then so far this week, 5 minutes before the Open every day, except Sunday. Sunday, I think it was 10 minutes after the Open. But what I do is I put a message, or try to, in the discussion group each day. CTAs are scheduled to come out at 5:55 p.m. Eastern. Or if I know I'm not going to be able to do that, then I put a note stating that. So because I don't want you waiting for something that's not going to come, okay, right away. So last night, all of our members, all of our trial members, had all of these targets 5 minutes before the Open. The S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let's go take a look at the chart. We're still consolidating here at this 62% fib retracement. Now the fibs go from the low of August 5th to the high of December 6th. This is a 62% fib retracement. We've been consolidating there. Well, we first hit it on March 10th. So we got 1, 2, 3, 4. We had a little spot of green yesterday. And last week we had a little tiny spot of green. Mostly it's been red. Now, if we put our cursor here, we can see that the next potential support is 55.23. And then the next potential support is 54.99 and a quarter. Then you would look here, here, and here. If we take that out, we're headed for 100% retracement. And I can't remember. I don't know that I've ever seen 100. Well, no, I have. Back in 2000 and back in the financial crisis, 2007 to 2008. But remember, while individual stocks can go to zero, the indices never will because of the way they're constructed. The S&P has 500 large cap companies that meet a long list of qualifications set by the board over at Standard & Poor's. And when a company gets weak, misses their numbers, or has other issues, they get removed from the index and get replaced with a strong bullish company that is beating their numbers, has big expectations. Okay, so they're constantly reshuffling the deck of all the indexes. So even though you may get a 62% retracement, or even 100% retracement on this particular chart. Over time, guess what? Imagine how people felt back in 2000. You really need to go to the charts on TradingView. Go to the S&P Cash Index and put it on monthly or whatever the largest time frame is they have. And those sell-offs that looked at the time like the end of the world, well, you need to see it for yourself. Maybe the end of the broadcast I'll bring up TradingView and show it to you. All right, the green line you see here is called the BBC, stands for bull, bear, cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Now the daily chart's important because institutional traders, ones with massive account size, who trade in massive size, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. Because of their deep pockets, they can stay in a profitable trade longer than you or I might be comfortable with, and they can weather a much deeper drawdown than you or I could afford. So what I encourage is that whether you trade futures, stocks, crypto, Forex, ETFs, just go look at the daily chart for 2 minutes before you drop to your smaller time frames to start trading. And you'll see not only what the deep pockets are doing, but you're able to identify major areas of support and resistance. Now we can see the high of today, just like the high of yesterday. Notice that the black step line and the CFMA1, which I refer to as blue and climbing, red and falling, see how they cross, and then they cross, and then they cross. These two have been glued together for a while. I don't know that I remember seeing that. Certainly not for this period of time. But again, because we're still straddling that 62 and consolidating now for the 1, 2, 3, 4th day, it's possible that we could be transitioning for a move up. However, the move up is going to take a lot of financial commitment. For price to rise, it requires financial commitment. But when buyers, institutional buyers, hit pause on the buy side, you get a lot of this, okay? And you'll always have bottom feeders come in and try to run it back up, but you can see what the weight of the institutional traders is. And you can identify, okay, let's say we get above this initial resistance. Right above that's the 50% fib retracement, which we would expect to be good resistance. You can't see that on your smaller time frame, okay? Yesterday's high would be, well, after today's high, then yesterday's high would be the next potential resistance. And then this low right here, potential resistance. And then the 50%, you get the idea. This big picture view helps you understand, again, not only what the institutional traders are doing, and remember they move price, but it helps you identify the areas where you should expect major support, major resistance, and a potential change of direction. All the alerts are created on the 30-minute chart. Nothing magic about 30 minutes, it's just the time frame I chose years ago, and they say if it's not broke, leave it alone, so I've just left it alone. The vertical lines that you see separate today, Thursday, from Wednesday. Here's Tuesday. The weekly trading zones are published every Monday morning at 6:15 a.m. Eastern for the past 15 years. December 9th, no, December 14th of last year marked 15 years that we've published the weekly trading zones on a weekly basis. Now, when Monday's a holiday, we publish them Tuesday morning. This week, because I had a computer issue, I didn't get them published till Tuesday morning. But as you can see, when price drops to a zone, we expect support. When it runs up to a zone, we expect resistance until proven otherwise. From resistance to support to resistance. And we've now traded below, again, the lowest weekly zone, 5550/51. Now, for 15 years, what we've experienced is if we break the highest or lowest weekly trading zone by Tuesday morning, then there's an extremely high probability that by the end of the week, the markets will be at the other end of the spectrum. But with all the FUD out there, not so sure that's what we're going to see this week. Okay? We could. So, it's not Friday yet. It's not close of business. But the institutional traders would really have to show some strength. I mean, you can see how we've just been consolidating here between, basically this zone at 5632/33 and this zone at 5550/51. Now, this low is also Tuesday's low. Market structure. You should be expecting support in that area until proven otherwise. So that support sent us up to the zone, which sent us back down to support. Support sent us back up to the zone, and we spiked up. See the wick? It touched red and falling to the tick. And so that resistance is now sending us back down. So the big question is, how long will this support hold? Or will it hold? Maybe it won't. We may find out before this session is over. But this was the open last night. We attempted higher and we failed. We were not able to take out that high right there. Sign of weakness. And so price comes back to the BBC. Blue and climbing turns to red and falling. And then down we go with that perfect stack. Price, step line, red and falling, right to the short target. Here. Support will always send the market looking for resistance. Right here is a bearish cross. That's when the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. And it was. Does it happen every time? No. Very few things happen every time in the markets. Some people try to convince you they do, but anyway, I'm just telling you the truth. So anyway, we got back up to the area that we would be expecting resistance, and it was. Sent us back to the BBC, and this is tough going here when you're below, you're above, and anyway, once blue and climbing turned to red and falling, where do we go? We overshot the short target. Okay. In fact, we even took out this low right here. But on that initial move, we did not take out this low. And this is the lowest weekly zone. So we got below the lowest weekly zone, and we've now taken out that support. Remember just a second ago we were looking at that? This looks like it's going to be another brutal day. Yeah, we're almost in uncharted territory here. But the days relatively young, so we'll see what happens from here. On the Dow, last night we opened basically right at the weekly zone. We consolidated. Now, only three things happen at a weekly zone. 70% of the times consolidation, 20% of the times rejection, 10% of the times the slice. That's when a 30-minute candle slices through a zone like it's not even there. When that happens, typically under normal market conditions, price will retrace back to the zone it sliced through and then continue in the direction of the slice. So we came back down, we hit that short target, and now look where we are. And that is the lowest weekly zone. If the market were to somehow, by close of business Friday, get back above this lowest weekly zone, I would have to post the surprise-o-meter again in the discussion group. I mean, anything can happen, any kind of news can break. You never know. You just don't know. All right, the Russell. Here's the open. Consolidated sideways right there at the BBC. Blue and climbing turned to red and falling, and it took us right down to the short target. You only need 2 points in the Russell. So this candle here opened at 2022.7 and hit a low of 2017.9. So I mean, there was room in that one candle or that one candle or even that one candle to get your goal for the day. Support will always send the market looking for resistance. This resistance, as we've seen, these are not normal market conditions, but this high still lines up with that high right there. See that high from yesterday? Should you be expecting that to be an area of resistance? Yes, until proven otherwise. Okay? So resistance will always send the market looking for support, which it found briefly, very briefly, at the zone 2008/2009. Now that's not the lowest weekly zone. The lowest weekly zone is down at 1930/31. So that may be where the Russell's going to try to head next. We'll see. Right now, price would have to overcome the step line, the zone, red and falling, the BBC. Then you've got this area, and this area for potential resistance. So, I mean, there's just a tremendous wall of worry that the market has to climb. In Q, here's where we open. Popped right up to the long target. Resistance. Okay. You see where the resistance was based on, right? Okay. Right there. And then we come back to the zone. Blue and climbing turns to red and falling, and it drops us. And it drops us right to the short target, pretty much to the tick. Yesterday's low, right there. That's it. Market structure. Okay. Support bounced us. We came back to support. This time support took us all the way up to the zone, which we expect to be resistance until proven otherwise. Then we got a retracement. We hit the zone again. We were not able to break above the zone. We rolled over. Blue and climbing turned to red and falling, and down we go. So we hit the short target here and then bounced back up to the BBC, hit the short target again, bounced up to red and falling, hit the short target again. So there were many opportunities. Many opportunities to get your goal for the day in here. Only takes 5 points on the NQ. So the low we're at right now Thursday, Wednesday, Tuesday. That should be the next area. If we keep dropping, that's the next area for potential support. Crude oil. Here's where we opened last night. We had red and falling, so we dropped to the BBC. The pullback holds more often than not, but eventually it always trades through. So it gave us a bounce, and we bounced right up to that opening high. And we came back down, got below the BBC. Market found support here, right in this area right here. Okay. Which sent us up to the long target and the zone at $67.95/$68. Resistance sends us looking for support, which we found at the short target. Bounced us up to the BBC. The pullback holds more often than not. And then down we go. Now this low right here, we took that out by just a little bit, but it did bounce us back up to the target. Okay, once you trade through a short target, when the market bounces back up like this, that'll often become resistance. Opposite's true of the long target. And that sent us all the way down to the zone. We spiked it. You know, we had news this morning. This was actually the 11:30 candle. Yep. Okay, so this low where we spiked to, it's right here. Bounced us back above the zone, but we ran into resistance at red and falling and the step line. And so now we are straddling the weekly zone at 66.75/66.80. Gold, big day for gold. That's the highest weekly zone, I do believe it is. Yep. Okay, so here's the open last night. We made it up to the long target. A pullback into blue and climbing, support. Took us to the zone where we consolidated. Resistance sends the market looking for support. This little oddball candle, it actually opened and closed below the BBC. So that would lead you to think that you were headed lower with potential support here. But buyers came in and pushed us back up to the zone where we consolidated for hours. And we had one last pullback to the BBC and then off like a rocket to the highest weekly zone at 29.97/29.98. What was the actual high? 29.98.5. Okay. See how you had that perfect stack all the way up? Price, step line, blue and climbing, BBC. And last, silver, which had a huge day, $5,000 per contract day. We opened here last night. We dropped below the zone. We hit the short target to the tick, as they say. Support gave us a bounce, retracement, and then a massive leg. When the price of silver moves $1, that's worth $5,000 per contract traded. So we spiked that zone at 34.50, which, just like gold, is also the highest weekly zone. Now we're retracing, and the step line is directly above blue and climbing. So chances are we're going to pull back to the BBC unless we find support at blue and climbing. Okay, Michael's here. He's going to give us a recap of what happened this morning in the live training room. Then we'll do some live trading on the TradingView platform. Then I'll come back and wrap things up with our good word for the day.
All right. Let me grab it and bring it over here. Hang on a sec. Here it is. All right.
That looks good.
Good. So I got Malwarebytes installed. So
Oh, did you?
I'm on the road. I did, yeah. Yeah, I'm at 100% protection right now. That's what it says.
Awesome.
All right, here we go. Good afternoon, everyone. Today is Thursday, the 13th day of March, 2025. Now, if you have not taken a free trial with us and you'd like to, go here to mytradingiq.com, click on the purple button right here. Right, there is no credit card required for the trial. When you click on that purple button, it's going to bring you to this page, right here. And on this page, all that we ask for is your name, your phone number, and your email. There are 5 multiple choice questions there for you to answer. Once you answer those, down here at the bottom, if you have a NinjaTrader and you want to use Ninja charts, you can give us your machine ID and we'll give you what we have for charts on Ninja. But you should really get TradingView because that is where we have the indicators that we primarily use in the morning session. So sign up for TradingView. It gives you TradingView login ID. Okay. Now, just to clarify, the TradingView login ID is going to be the thing that's up here on your computer when you log in. For me, it's over here, but I have premium. For you, it'll be over here in the upper right-hand corner. There'll be something up there, maybe a letter, an initial, something like that. And you hover over that, and it's going to say what you're logged in as. Okay, that's what you need to give us. All right, spreadsheet. We had a good day again today. It started off rough again today. We started out with a stop off on gold. Started off with a stop out on gold. I said that backwards. That was weird. Anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down the CFTC risk disclosures down at the bottom. So today we're up 403 on the NQ, 34 on the Russell, 28 on gold, and 25 on the ES. So that put us at $2,777.50 with one contract this morning. Today it took 4 minutes and 4 trades to get to the goal for the day. At that point, we're up $2,300, and we took a total of 52 trades this morning. So on the month now, that puts us at $8,150. That is with one contract over 4 business days, averaging $2,037 with one contract per business day. All right. On the year now, we're at $65,632 over 41 business days, averaging $1,600 per contract per 2-hour business day on the year. All right. Now this year, last year and the year before, I was doing a lot more training in the morning than I was trading. Okay, probably half of the morning session was training. But now the stuff is so simple, you don't need as much training. I mean, I did take a little time this morning, go through some training things, but I don't have a lesson plan like I had the past couple of years. Maybe I'll change that. Maybe I'll make a little bit of a lesson plan. And we can start out like on Monday and spend a half an hour on Monday, maybe a half an hour each day, going over lesson plan items. But the stuff is just so simple now that we don't need to spend a lot of time on that. I don't think anyway. And we can make a lot more money. I did say 2025 was going to be a completely different year, and so far it has been. So if you're following the 24/20 blueprint, so far this year, you only had to work 6.6 hours. If you quit trading when you got the goal for the day and you added one contract per month, so far this year you would have to work 6.6 hours and you would be up $11,550. So that's if you started with one contract, then you added 2 for February, you added one more to go to 2 for February, and then you added one more to go to 3 for March. Whatever you started out with would be that plus $11,550 right now. Okay, so we're averaging $1,745 per hour following the 24/20 blueprint so far this year. Now let's see how we were when we started the 24/20 blueprint in 2023. Let me go back to the beginning. I know this is going to take up a little bit of time here, but I'm curious because we went all the way through from the beginning to end of the 24/20 blueprint in 2023. And after 3 months, oh, I don't have the individual things here in 2023. I guess I probably have it down at the bottom. So this is after 3 months in 2023. We were at $10,265. That's after 3 complete months in 2023. That is starting with one contract and working the way up. Okay, and in 2024, so it's 10,000 something in 2023, and in 2024, I think I did it individually in 2024. After 3 months in 2024, we're up 7,947. So this year, in 2025, after 3 months, they're at 11,550. So it's better than any of the prior 2 years, is where we are right now. Right? And that's by a large margin, really. And we're not even done with the 3rd month. So it's good stuff. It's all good stuff. We still have, actually, this month, we're only on the 13th day of this month. We still have a full 2 weeks left, 10, 11 days left, 11 trading days left this month. I don't think we have any more holidays in March. Anyway, food for thought. All right. What's the difference, you might ask? The difference is that I'm trading more hours than I am training. That's one part of it. And just the trade setups that we're using this year are giving us much better results. It started right here, the last week of last year. You can see when it started right there. Right, so there's a combination of things that keep making things better. So those of you guys that are watching, the combination, I mean, one of the things is that I'm starting at 927, and oftentimes I get the goal for the day on the very first trade. That makes things better. As far as the 2420 blueprint, that makes things a lot better, the 2420 blueprint. But the actual trades that we're taking, they're a lot easier to take, and they're actually giving us much better results. You don't filter out so many things. With the way that we're taking trades right now, you're not filtering things out as much as we did before, and they're much more accurate. So we're taking more trades, more better trades is what it is. All right, that was a whole bunch of words. Now let's get into what we did actually do. Okay, we had a whole bunch of trades today, 52 trades today. So there's a lot to go over. I'll just start with gold and we'll go right through it all. Okay. We just hit the Alt button and go backwards because there's the Russell is the one we had the fewest trades on. Gold we had a bunch of trades on. We'll get to the beginning. Here we go. Our very first trade of the day was in gold and we stopped out on it. Right there. Stopped out on it, but then the very next trade after that, we got it right back. We were minus 10 on that, then we got plus 12 on that. So we're plus 2 overall. And then we got a plus 3 right there. Now that plus 3 coupled with the 36 ticks I got at the same time on the NQ is what got us the goal for the day. Okay, but at this point here we're at plus 5 after that trade right there. We're at plus 5. Then we stopped out again, went down to minus 5. Then I made a little bit of profit and got us to minus 2. Then I made a little bit more profit, got us to plus 4. Then I had a break even and another break even and another break even. And in here, right from plus 4, I have this stop out in here. I don't think that that's right though. I don't think I actually did stop out there. So I went from plus 4 to plus 26 and then 26 to 31. And then 31, we did stop out after the 31. We went down to 21. So we did stop out there. From 31 down to 21, then we had a small gain to get us to 22. Then we went to 24 and then 27. So there's a couple other trades in here that I missed. We had a couple of small trades. We went from 22 up to 27, which was a 5 tick, and then from 27 to 28, which was a 1 tick. But we did get this stop out. There were a couple of trades before that that I missed too. So overall on gold, we went from minus 10 to plus 2 to plus 5 to minus 5. That was a stop out. So we started out with a stop out, then we had another stop out. Then we had a plus 3, and then a plus 6, and then a plus 20, and then a plus 5, and then a minus 10, and then a plus 1, and a plus 5, and a plus 1. So there were 3 stop outs and some more gains in here. I didn't put everything down. There was a lot of trades going on this morning, so I apparently wasn't marking everything on the chart, but I did mark everything as we did take them all. So there were some really good opportunities today in gold, and you can see them here, all these opportunities in gold, long and short, and they still continue even now, right? And that was gold today. So the Russell, we didn't have that many trades on the Russell. We ended up with plus 34. We did have a stop out on the Russell somewhere in there. Let's go back to the beginning. There's the stop out right there. All right, so the first trade on the Russell that we took was right here. We ended up with 5 ticks on that. Then we had a big trade here. Went from 5 to 37, so we had a 32 tick trade there. Then we went from 37 to 39, so we had a 2 tick trade. And then we stopped out minus 25. That brought us down to 14. And then we had a 20 tick trade there to get us back to 34 and break even. And then I was doing some calculations in here about what I thought the market was going to do. And you can see it did get down to that level that I was projecting it would go down to. It pulled back to that level and got down to that level. And then I wasn't looking at it so much anymore after that. But there are still some more opportunities in here on the Russell today. All right, if you look at the numbers in here, any one of those numbers that is greater than 10 would have been a good trade for you. And so pretty much all of them were that one, 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 that one. That one wasn't. That would have stopped you out. That would have stopped you out. That would have stopped you out. I can't tell on that one, but if you don't have your goal for the day between all of that right there, or if you keep going after all of that, well, you know, every trade you take is a risk. We ended up with plus 34 on the Russell is what we ended up with. The ES now, we had a bunch, no, not a bunch, we had a fair amount of ES trades. Okay, let's scroll back to the beginning of this. Okay, here we go at the beginning. And looks like we didn't trade the ES for a little while. We had a break even on our very first trade. Then the next trade after that, we picked up 14 ticks. And then we stopped out, brought us down to 4. Another break even. I was talking about something in here. I don't know exactly what, but I was talking about something. Oh, I know what I was talking about. Flat spots. You know, if you have a longer leg, you're likely to get a flat spot. And I was talking about this right here. It was happening. And break even, and then we're at 4 at this point. We got looks like we got 14 ticks here to get us to 18, and nothing there. And we got 3 more there to get us to 20. Oh, 2 more to get us. No, 1 more to get us to 19. Then we had a break even. Then I'm not seeing the other trades, but we had some small trades. We went from 19 to 21 and 21 to 25. Okay, so we ended with 25 on the ES today. Now, let's just go all the way down here to the end where we have some labels. There was a lot of chop on the ES today, but it was really small chop. It was tight chop. It was given some opportunities in there, but not as many as you'd like to get. Okay, there's a lot of that today on the ES. The NQ, we had some nice trades on the NQ today. We ended up with 403 ticks. Now, we did have some good 75 tick trades, as you can imagine. We did stop out a couple of times, I think. I know we stopped out at least once. All right, so on the NQ, we started out here with a 36 tick trade right here. This is where we got the goal for today. This combined with the, I think it was a gold trade. It got us up to 5 on gold or something like that. I think that was a combination of trades right there that got us the goal for that day. So we had 36 on the very first trade. Then we went to 48. And then from 48, we had a 75 tick trade there, got us to 123, then a break even, then a screwed up trade that I did right there. I didn't take a full stop out on that. All right, I only took a small stop out, I think 11 ticks. And I ended up at 112 after that. All right, that was a messed up trade that I did there, and I caught myself. Then we picked up from 112, we went to 152, then 152 to 166. And 152, 166, and from 166 we went to 243, had a break even, then 243 to 299, then a break even, and then 299 to 327, then 327 to 343, break even, then 343 up to 380, and then a stop out, up a break even, and then a stop out, brought us down to 320. Went to 328, and from 328 right here, I had a 75 tick win to 403. One break even after that, but that was where we ended it at 403 this morning. So it was a pretty active morning. We had a ton of trades, and there's just been a ton more. You know, we had a lot of chop on all the markets this morning. There was a lot of chop. Look at all this chop in here. And with the stuff that we're doing, with this divergent stuff that we're doing, chop is great. You know, you get a lot of opportunity in the chop to take trades. You know, you just see the little labels that are here, but there's actually trades that are not shown there on the labels. Like there was a short right here. It was a great short right there. About 75 ticks. It was a long right here. That one got the 44. There's a short right in here. That one didn't go much at the beginning, but it did end up going down. And you know, there's a trade right here. That would have been a nice trade. That's not shown by a label. There's just a ton of opportunity out there this morning. A ton of opportunity. Now, yesterday, I don't know if you're watching on YouTube, whoever asked a question yesterday, at the end of the session yesterday, or toward the end of the session, somebody asked a question on YouTube and I wasn't here to answer it. So if you're watching on YouTube now, you can punch in that question again and I'll be happy to answer it today. Because right now it is 1:14 and we have 16 minutes of trading left to do. Right here on gold is a long trade. Okay. So, yeah. Hang on. Here it is. There. Okay. So I just went long on gold. It's a long trade right here on gold. All right, so gold is on a 7 range, so I'm using a 10 by 30 bracket on the gold because it's on a 7 range. It needs to go 4 ticks into profit. I don't think it had from the open. 89.8 was the right spot to get in. I'm off by 2 ticks on that, but I guess it did go 5 ticks into profit, so I probably shouldn't be in this trade, but we're going to stick with it anyway because what should it do when you look at this? This is the leg down. The pullback should get up to here to 91, right? Up here to 91. That'll be enough to get the stop to break even. You can see the numbers are up there supporting it. Looks like it might just stop me out though. It might. We'll see. If it does, it does. There's no trade here on the Russell, and it did just stop me out on the gold. There's no trade here on the Russell. There's no trade here on the NQ right now. Right, the gold just got me, and I shouldn't. That was a mistake. Right now it's going up like it should have. That was a mistake. I shouldn't have taken that trade because it had already gone 5 ticks into profit. All right, so now it's got a short right here from where it is, and this is another valid trade, right? And I didn't screw this one up. The entry point should be right here at 90.6. I'm actually in 1 tick better at 90.7. Okay. And so the retracement was a little deeper than I thought it was going to be. I was saying 90.3. I thought is what I was thinking it was going to retrace to. It went a little further. It could do 100% retracement. If it does, you're going to get a flat spot up here. But we'll see. Right now, if we get an up close on this bar, we're going to have at least a small flat spot. There it is, the flat spot. Wow, 2 step outs in a row on gold. It's not how you want to start this off. But I did mess up the first one. The second one was a valid stop out. The first one I messed up. All right. Reminder, today is Thursday. If you're not a partner, you want to get into the partners meeting, it is tonight at 8 p.m. Sorry, 8 p.m. tonight, Eastern time. Daily savings time. It's at 8 p.m. tonight, Eastern time. Okay. And so the gold's actually got another trade here. It's gone into the oversold by itself. So the open of this bar right here is a spot to short it if you want to. Okay. The open of this bar right here at 1.2. Now this is a 50% retracement of this leg up. That's what you're at right here. So from right here, it should actually move up. Here, I jumped on. It should actually move up from here. It should have another leg up, the same size as this last leg right here. That's what should happen. That's what happens. Nothing there, nothing there, nothing there. Okay, we need 4 ticks in profit right now. To bump that stop, it's got to get up to 1.4, and it has not gotten there. It has gotten there. I was not looking at it. Okay, so now I need to bump it to break even as soon as I can because I missed the opportunity that I had there a second ago. All right, so I do suspect it's going to go up. So in 3 trades, I've made 2 mistakes. Hopefully I won't pay for this one like I did the last one. It looks like I might. All right. Nothing over here, nothing over here, nothing over here. So all the indices are dropping. That's usually good for gold. Nope. 2 mistakes, and I paid for both of them. All right. I don't know. Were there any questions out in the YouTube? I don't have YouTube open. So. Nothing here, nothing here, nothing here, nothing here. Not really a great show here on the gold yet. 3 stop outs in a row. 2 of them are mistakes. 1 valid stop out. Well, here, I'm not going to stop out on this one. My stop just went to break even on this one. Okay. It's a nice 30-tick trade right here would make up for those last 2. But I'm probably going to get a break even. Yeah, break even. Gold is the only thing that's giving us anything right here. And the ES just gave us a trade here that I missed. Just can't look away. Since I look away, I miss something, it seems like.
Michael, did we lose your audio?
No, I'm still here.
Okay.
Nope. Do we have anything on YouTube right now? Does anybody ask any questions on YouTube?
Nothing yet.
Didn't have the same thing we had yesterday. No, I was waiting for everything to come together here. So far, I've screwed up twice on gold. I stopped out on both of those. And I had one that was just a typical stop out, and then I had 1 break-even trade. So all the trades have been on gold. There's one here on the ES that triggered that I didn't get. That was a good trade. And nothing on the NQ and nothing on the Russell. That's what's happened so far.
If you get a chance, you might look at the S&P index on like a monthly, because I know things look pretty bad right now on the daily chart. I mean, we're on at a 62% fair retracement.
And the SPX right here. This is on 1,000 range.
Well, okay. I think you're gonna need to go to like monthly.
Yeah, let's look at that. Here's monthly.
Now, are you sure that's the cash index?
It's SPX, 1 month.
Yeah, but I don't know if SPX is that the right symbol?
I think it is, isn't it?
Just go to indices up at the top. Yeah.
Indices.
Okay, I guess that's.
Oh, here.
Index.
I'll go to SPX. That's
S&P 500 index. Yeah, I guess that would be the one.
Yeah.
Okay.
All right. So this is what it looks like.
You're on monthly now. Can you how much can you scrunch it up? Monthly is as large as they allow you to go, right?
No, you can go more than that. I think 3 months, 6 months, 12 months. So I can go out to annual if you want.
Yeah, go annual, I guess, and it will.
Okay, so here's the annual.
So what I wanted to be people to be able to see was like 2000 when we had the .com crash.
Right here. Oh, 2000 way back here.
Yeah.
2000.
So
There's
we
99.
might be
92,
better
here it is,
served
right.
just going with the monthly.
Oh, here's 2000 right here.
Okay.
We had the crash, and this was the retracement right here. This is what you're trying to get at, right?
Yeah. And then the financial crash, 2007, 2008.
Right here. Yep.
And look where we are now. And I mean, when we look at a daily chart, we're at the 62% fib, and it looks like the end of the world. But imagine how people felt, those that weren't traders, back in 2000, back in 2007. I was just trying to make my point. I was talking about it earlier, that while individual stocks can go to zero, because of the way the indices are created and they're always shuffling the deck, it's going to always go higher over time.
Yes.
So
they are not made to go down.
When we got that dip in 2000, that looks like about a 50% retracement.
Yeah, if you go from way down here at the beginning of 82, but if you start here, like in the 90s when the whole .com thing really did start, if you go from like right here to right there, here's 50% right here in the middle of it all. And if you go from 82 when Reagan became president, or 80, way back here when Reagan became president, then it was exactly a 50% retracement.
So from right there, drag it up all the way to where we are now. If you grab that little...
Yeah.
Nope. Oh, I meant...
Drag it.
Yeah.
Oh, this is still basically the same projection. It'll do the same projection for you. 6680 is what the top of that is.
If you grab the bottom of those fibs and pull it back down to the Reagan areas...
Yep. Yeah, let me put that back down in the right place. It was over here, right? 8180. Let's go over one more. There. Can we drag it all the way up to here? Is that what you want?
Yeah. Except it's backwards.
Yeah, my numbers are, well, I mean, you'd be looking at the 68%, so it's 78.6. This is the same spot right here, I think.
So I as ugly as it all looks right now, with all the fear, uncertainty, and doubt, FUD, in the grand scheme of things, I mean, it's a definite blip, but so far it's nothing more than a blip.
Yeah, it's a buying opportunity, is what it is. That's the way I'm looking at it.
Yeah, I mean, there may be more. We
more
could
to
drop
the downside.
More.
Yeah,
we could get down to a 24% retracement, but that would not be as horrifying as back when we had that 50% retracement.
Right here. Yeah, that was huge. That was huge back then.
God, this thing goes all the way back to 1895.
It goes all the way back. Yeah, it goes way back there.
I don't. I'm not sure there was an S&P index back then. I don't know. Anyway, you've demonstrated to the folks what I had told them that we would try to look at today. Just so, up close, the sell-off looks incredibly horrible and frightening. But when you look at it from the big picture, I mean, people thought it was the end of the world in 2000. They thought it was the end of the world in 2007. And now here we are, almost 20 years later, 2025, and we got a retracement. So
here's what is likely to happen, in my opinion. If it's going to keep going down, I suspect it will, because there's going to be a lot of bad news. I mean, it's not, if you're looking at the very short term, and if you're one of those guys getting laid off or whatever, then it is bad news.
It is.
But overall, this is at the end of it all, this is going to be great for our country, as long as we manage to maintain, control of the House and all that.
If we manage to maintain control of our country.
Yeah. of our country, basically. Yeah, as long as the Republicans stay in charge, for a period of time, a significant period of time, you know, then everything that's happening now is going to benefit the country in the long run. I know short-termers, it doesn't look so great, but right now, I think
I mean, after
this
4
should probably.
years of utter unbelievable mismanagement, waste, fraud, and abuse, uh, you know, it's like, well, I thought you were going to fix everything. Oh my goodness.
Yeah,
It hasn't been
4 years.
it hasn't been a month since the
Mhm.
inauguration.
I know, I know,
Oh, no, no, it
and
has. I'm sorry. It was January
yes,
21st.
it's yeah,
So we're
it's been
closing
a
in
month,
on
month
60
and a
days.
half.
Closing in on
Yeah,
60 days. Yeah.
but still, you're not going to undo. I mean, like tremendous errors and mistakes and things that just complete waste. You can't undo that. And I was reading last night. They're trying to do some accounting tricks, basically, to sort of get a clean slate for the Republicans to start with,
Hmm.
and with what everybody's saying is if you do that now, let's say you do that and you do that now, who's to say that the Democrats, when they're in charge again, because they will be in charge again at some point, who's to say that the Democrats won't do the same thing? And then who's accounting for it all? At the end of it, at the end of the day, all this money that's made up, who's accounting for all that? But you know,
Well,
for
the American people are being shown because you can go to Doge, DOGE.gov, and you can see what the American taxpayers' dollars have been being spent on,
mm-hmm,
you know, for
yeah,
quite a number of years. And the
and
bureaucrats are very upset because their gravy train, is potentially grinding to a halt. And then these lower court judges, these these lower court federal judges have the ability to override the president of the United States. There's something hugely flawed there, and the Supreme Court is going to have to rule on that.
yeah,
In fact, I forget which one of the justices it was wrote in his opinion the other day about the one ruling where he was stunned. He goes, I'm absolutely stunned that a I mean, there's plenty of Democratic federal judges strewn all over the country. How hard is it to find one that is willing to get their 15 minutes of fame to
yep.
strike
They're
down
at
a
the
presidential order?
they're at the
That's
end of
not
their
how the
career, and
Constitution was created. There's supposed to be separations of power. You've got your executive branch. You've got the various branches, and they're supposed to all work together. But for someone at the bottom of the food chain to be able to overrule somebody at the top of the food chain, that's not what our forefathers had in mind. So anyway,
no, not at all, not at all. Um, all right, well, we've run out of time.
oh my goodness, sorry.
Yeah, I know. That's okay. That's all right. I was getting my butt whooped by gold anyway. The Yeah, I'm going a little further down that road though. Um, I think it's going to get worse before it's going to get better.
Yeah.
But keep in mind that it's going to get better. I remember saying those exact words back in 2008.
Hmm.
My brother-in-law's father, he was getting near retirement, and he took a hit in his retirement account, and he said, I'm down 30% in my retirement account. Do you think I should bail out? And I said, well, is it in indexes? And he said, well, mostly. And I said, well, it's going to get worse before it's going to get better. But if you don't need the money right now, then don't do anything. It'll get better. And now he's got a house in Florida, and he's got a house in Connecticut, and he's he just hung in there, and everything got better enough so that he's
Yeah,
able to retire the way he wanted to retire.
that's what I said earlier and wrote the other night in the discussion group was, guys, if you're an investor, I know you got to be nervous, uh, but hang in there. And I did remind everyone that individual stocks can go to zero, so don't bet the farm on an individual stock. Put it in one of the indices, because over time they're always going to go higher.
Yes.
And once we wrap up here, I'm going to show you my daily chart just real quick,
Okay.
so you can see
All right.
where we're at there.
Well, let me show one more time how to take the free trial. If you haven't done it, go here to mytradingiq.com, click on the purple button, no credit card required. Do that, and you'll be brought to the registration page. Fill out this page, and we'll get you all the stuff to get your indicators indicating on your charts, so you can get started with us and start making some money. Yes, as a short right here.
Don't hesitate to sign up for the trial today, even though tomorrow's Friday, because you'll still get 5 consecutive trading days.
Yes, you might even get 6.
The weekend does not account against you.
Right. All right. And so with that, I can pass back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. And that ES trade is starting to run right now. That short that I took just now. Going to break even.
Okay, I'll show you this real quick. I know you got to go.
Okay. Well, the recap of the recap, I'll tell you what that was first.
Oh, yeah, let me do that. Recap of the recap.
Today it took 4 minutes and 4 trades to get to $2,300 with 10 contracts on. Okay.
Good job.
Thank you. Now show me.
So, this is the all-time historic high, December 6th. And we've been straddling the 62% fib retracement now for, basically 1, 2, 3, 4 days. We talked earlier about the next major support being right below where we are, about 55.01. And then we're down to here. So, I mean, yes, this does not look good, but guys, make sure you put it in the perspective of what you just saw on the S&P 500 index, over a period of years.
Yes.
I mean, it's painful on the way down, and it takes financial commitment for price to rise. So, I mean, this market has fallen from this carnage has fallen from basically February 19th to today, March 12th. It's not even a month. Right?
Yeah, February 19th as well. It is not a month.
To March 13th.
And it's even less than a month because we only have 28 days in February. So it's even less time.
Yeah.
Usually you figure.
Yeah. And it's not going to return as quickly as it fell because it takes financial commitment for price to rise. So hunker down, follow sane advice, and because if you dump your portfolio, that's probably going to be the day it turns around. So now if you're in individual stocks, you need to get with a licensed investment professional and discuss what you should do. But if it's an index fund, in my opinion, that's all it is. It's just one guy's opinion on the internet, is you don't have to worry about it.
Long term,
right? So
that is the truth.
Okay, buddy. I know you got to run. All right, guys.
Yep. We'll talk tonight.
We've covered everything. So if you want to become a member, send an email to support@cfrn.net. In the body of the email, or in the subject line, put "I want to become a member." In the body of the email, put your name and your phone number. We're not going to call you, but we will email you an information packet that explains everything it means to become a passport holder. Number 1, 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. People buy books, they buy video, they watch videos, maybe they sign up for some courses, you get a PDF and maybe some indicators, whatever, and then that's it. But none of the, and there's nothing wrong with any of those things, but they're not a replacement for a living, breathing human being putting on, taking off trades live in real time, explaining every move they make, every trade they take, and answering your questions all at the same time while you're trading in your demo account to qualify to go live. You got to learn the strategy before you start trading live. And that's what the 24/20 blueprint will do, is walk you through that process from your demo account all the way up to 20 contracts. It's called the 24/20 blueprint because it's designed to help you go from 1 to 20 contracts over a period of 24 months. So that's 2 hours of interactive group training every trading day, access to private one-on-one mentoring, the strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Also, as a passport holder, you get the Logic 247 alerts, you get the concierge trade alerts every Monday morning. Now, the concierge trade alerts, you get them the second they're published each evening. And for 2 weeks now, with the exception of Sundays, I've managed to get them out 5 minutes ahead of the open. Been doing it for a couple months now, and it seems to have worked out well. So there will be some days I'm not able to get it out ahead of the open, but on every day that I can, I will, and I will notify you in the discussion group if you should expect, because I do them first, and then I put the message in the discussion group that says CTAs are scheduled for 5:55 p.m. Eastern. Monday mornings at 6:15 a.m. Eastern, you get the weekly trading zones. Once they're published, they're carved in stone for the entire week. We've published the zones since December 14th of 2009. That's a little over 15 years. And you're able to attend the members only workshop every Thursday night. That means if you became a member today, you would be in the members only workshop tonight. You'll get an invitation, but you got to get on the stick so that Valerie has time to take care of all the paperwork. Just send that email to support@cfrn.net. And you get the golden key that opens all the private channels in Telegram. We got public channels, private channels, but once you're a passport holder, you have access to everything. Everything a trader needs, all under one roof, one low price. No more of this trying to patch this together with this and this other thing and this one thing you don't even remember where you got it from, but you've had it for 5 years, so it's never made you any money, but you're so used to seeing it on your chart, you just keep it there. I know it's hard to break away from things that you've grown accustomed to, but sometimes you just got to do it. So, support@cfrn.net. There you go. All right. And members, please have your questions ready tonight. Feel free to email or telegram them in ahead of time. And even if you can't be there, you can send in your question. We'll cover it first so that when you go to watch the video of the workshop, you'll know that it's going to be, your question's going to get answered up front. Okay? All right. Okay, for the last 2 days, we've been talking about the breaking process. Been on that topic for 2 days. Let's go for 3. Matthew 14:19. He blessed and broke and gave the loaves to the disciples. The Bible says that Jesus took the 5 loaves and the 2 fish, and looking up to heaven, he blessed and broke and gave the loaves to the disciples, and the disciples gave to the multitudes. Notice the progression in this story. The loaves were taken, blessed, broken, and then given to others. That's how God works. In order to bless others through you, he will take you, bless you, break you, and give you to others. Paul had to be broken of pride. I have received such wonderful revelations from God. So to keep me from becoming proud, I was given a thorn in my flesh. 3 different times I begged the Lord to take it away. Each time he said, "My grace is all you need. My power works best in weakness." So now I am glad to boast about my weakness, so that the power of Christ can work through me. For when I am weak, then I am strong. That's 2 Corinthians chapter 12, verses 7 through 10. So, if you're a thorny person or a situation in your life, God wants you to experience His grace and power through dealing with them. Paul finally reached the place where he could thank God for his thorn. The Bible speaks about the sacrifice of praise to God. Hebrews 13:15. When you're willing to sacrifice in order to have something, it means you value it enough to pay the price for it. Do you want to walk in God's power? Do you want to experience His blessing? Then thank God for your thorny situation and embrace the breaking process through which He is taking you today. And that is our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.